The art of trading. Have you ever wondered why you keep losing in trading, even when your strategy, signals and setups are all correct? Why do some people make money from the market every day, while others just watch? The answer isn't in any indicator. It's hidden in your mindset. Hello friends, you're watching Book Listener, where we don't just learn from books, we feel them. Today we are going to talk about the book that changed the thinking of thousands of traders, The Art of Trading. So let's begin a journey that will introduce you to yourself, more than just the market. Chapter 1. The Art of Trading. Ever thought about how an ordinary person, someone stuck in the daily hustle and bustle, burdened by responsibilities, steps into a world where every decision is a battle? Welcome to the world of trading. It starts with a dream where there's freedom, money, and most importantly, control. Control over your time, over your life. But when someone first looks at charts, colorful candles, lines moving up and down and eye-spinning patterns, only one question comes to mind. Can I understand all this? People often see trading as a game of numbers. But the reality is, it's an art form that is felt, that is lived. It's an art where a person first has to understand themselves, recognize their fears, and then overcome those fears. A new trader sits in front of the charts and every tick becomes tied to their heartbeat. If the price goes up, a wave of happiness. If it goes down, a storm of fear. This isn't just about money fluctuating, it's an emotional roller coaster, where every candle tells a new story. But the art of trading isn't about being right every time. The real art is knowing when to act and when to wait. Sometimes the biggest profit is hidden in patience. Have you ever wondered why some traders win consistently? Do they have some secret formula? No, their secret is hidden in just one thing: their mindset. They know that the market is a battlefield, and every trader is a warrior. But this war isn't with others, it's a war with the greed, fear, and impatience within themselves. Even when the market is calm, the inner noise can be heard. Even when the signal is clear, the voice of doubt arises. Only those who can cut through that noise to reach the truth truly understand the art of trading. Those who can understand that charts are not just lines, they are a glimpse into human psychology. Behind every breakout, someone's dream breaks, and someone's hopes take flight. In this world, every trader is alone. There's no one else. Decisions are their own. Consequences are their own. And that's what makes trading real, cruel but pure. A single day's loss can shake your entire identity, and a single day's profit can send your ego soaring. This is the art of balancing between overconfidence and fear. This isn't a shortcut, it's a journey that introduces you to yourself. You know what trading teaches you? Discipline, patience, courage, and most importantly, letting go. Letting go of a losing trade, letting go of your ego, letting go of the illusion that you can control the market. Trading is a mirror that shows you your weakest and strongest reflection. If you see trading only as a way to make money, you're probably seeing only a small part of it. But if you see it as an art, it will teach you not just the rhythm of the market, but also how to listen to the pulse of life itself. The market teaches something every day, and the true artist finds a tune in every signal, sees a poem in every pattern. The art of trading isn't just about charts. It's your story. The story of your struggles, your hopes, and your mental strength. Because the real trade isn't what happens on the screen. The real trade happens between your heart and your mind. Chapter 2. Reality-based trading. I followed everything, so why did my trade go into a loss? This is the question thousands of new traders ask themselves every day. The indicators were right. The pattern was clear. The strategy was textbook. But still, the market took a different direction. And that's when a trader breaks down emotionally, financially, and worst of all, mentally. Welcome to the world of reality-based trading. A path that ignores fancy predictions, fake gurus, and unrealistic expectations, and instead looks directly at the truth. The biggest deception in trading is that it seems so easy at first. Learn a few chart patterns, watch some YouTube videos, and then place your first trade. But as soon as real money hits the table, reality delivers a sharp slap. There was a young man, ambitious, excited, and confident. He stepped into the world of trading, thinking, I'm different from everyone else. I won't give up. I'll make millions someday. He used indicators, watched the news, and stared at charts every day. He won some trades, lost some. But slowly, one thing became clear. The market doesn't care. It doesn't see your hard work, your logic, or your dreams. The market only sees one thing: reality. Reality is that no one can be 100% sure. Reality is that losses will happen, and sometimes at times when you've done everything right. Reality-based trading is about embracing that truth. It means seeing the market as it is, not as we wish it would be. Even when a trader considers himself fully prepared, the market tests him, and it's this testing that makes a real trader. In this world, there are two types of traders. One who lives in dreams, and one who understands ground realities. The first tries to predict every time. The second simply reacts a calculated reaction. When someone says, "I know the market will go up tomorrow," they're feeding their ego. But when someone says, "If the market goes up, this will be my strategy, and if it goes down, my risk management is ready," they're operating in reality. In trading, those who break down the most are the ones who look at charts with expectations, and those who last the longest are the ones who move with confirmations. Reality-based trading means accepting that you are not in control. The market cannot be controlled. It can only be understood, observed, and actions can be taken based on that observation. But is it that easy? No, because it's human nature to seek certainty. We want to be sure every time. We want every trade to be profitable. And when it's not, we break. But trading teaches that it's not necessary to win every trade. It's necessary to consistently follow the right process. A single loss scares you, but consistent discipline makes you a winner. Reality-based trading teaches that there's a story in every candle, but not every story ends in victory. Sometimes, survival is the biggest victory. This is the version of trading where emotions take a backseat and logic comes forward, where confirmation is seen more than hope, where facts are placed instead of fantasy. And most importantly, this mindset teaches that trading isn't a magic formula. It's a discipline, a lifestyle, and a journey that tests your patience, your ego, and your decision-making every day. Only those who can look in the mirror and accept their own lies can truly understand reality-based trading. Because a trader who doesn't understand himself will never understand the market. So next time you sit in front of the charts, stop predicting. Observe. Don't judge. Wait. Don't react. Respond. Because in trading, victory belongs to those who recognize the truth and learn to walk with it. Chapter 3. The Psychology of Trading. A trader sits alone in his room. Charts scroll across the computer screen, but his eyes are elsewhere. He's wondering if he's doing everything wrong, because in the last 2 trades he did everything technically correct, but the result was red. And now he's afraid. Afraid to take a new trade, afraid to lose money, and most of all, afraid to lose to himself. This is the psychology of trading. That invisible trap that's more dangerous than profit. When we start trading, our focus is on strategies, indicators, and market trends. But as time passes, we begin to understand that the real battle isn't with the charts. The real battle is with our own mindset. A single loss breaks confidence, and a single profit builds ego. One day you think you're a genius, and the next day you avoid looking at yourself. It's a roller coaster where every emotion is extreme. In trading, the biggest enemy isn't the market or the news. The biggest enemy is fear. The fear of loss, the fear of being wrong, the fear of missed opportunities. And then comes greed, a greed that says, just one more trade, just a little more money, and that's where the decline begins. The mind becomes a battlefield. With every candle, a new emotion emerges. Green means happiness, red means anger or fear, flat means confusion and boredom. Have you ever noticed that when you're emotional, you feel the urge to trade the most? Because at that time, you're operating by impulse, not logic. Trading psychology tells us that until you can control yourself, there's no point in understanding the market. A trader's greatest strength isn't his chart reading. His greatest strength is emotional discipline. A discipline that says, I've made my strategy, and I will follow it no matter what the market does. But is it easy? Absolutely not. Imagine. You spent all day analyzing, found the perfect entry, and then the price suddenly moved in the opposite direction. Your heart says, exit. Your ego says, wait, the market will come back. Your fear says, everything's over. And your hope whispers, maybe this is a reversal. And in this conflict, you forget your strategy, and your decision becomes emotional. This is the moment where 90% of traders lose, because they learned charts but didn't understand themselves. Trading is a mirror. It shows you your true personality. If you're impatient, the market will expose it. If you're overconfident, the market will show you your limits. If you're insecure, the market will shake you every time. But the trader who learns to look within himself also learns to read the market signals. Once, a trader said, I started making a profit when I accepted seeing myself in a loss. because that acceptance teaches you that not every trade is necessary, not every opportunity is for you, and being right every time doesn't guarantee success. True trading psychology teaches that to control emotions, you don't have to become a robot. You have to become aware of your triggers, aware of your fears, aware of your reactions, and only then can you find the calmness that is the hallmark of the greatest traders. That calmness that says no matter where the market goes, I will stay grounded. Even if there's a loss, I won't break. Even if there's a profit, I won't fly high. Because the game of trading is won from within, not from outside. The more stability you have within yourself, the more consistent your results will be. And one day, when you can calmly observe every jolt of the market, you won't just be a trader, you'll be a real artist of trading psychology. Chapter 4. Risk and Money Management. The trade was right, but my account got wiped out. It's just a sentence, but the pain hidden behind it can only be understood by someone who has lost everything in trading. The biggest deception in trading happens when we're close to winning, and then we lose when we're most confident. In trading, people learn strategies, decode indicators, and try to catch market movements. But the thing that's most often overlooked is the most important: risk and money management. Every trader starts with a dream. Just one right trade and life will change. But that one trade often becomes the last trade. Why? Because there was no plan for what could be lost. The first rule of trading should be, protect your capital. But in reality, people are often the first to put it at risk. One loss is tolerable. 2 losses can be endured. But when losses become continuous and you haven't planned in advance how much risk to take, that loss sinks deep inside you. Risk and money management are the unseen guards of trading that protect you when everything else fails. A story comes to mind. There was a very passionate trader. He would keep his eyes glued to the charts every day. He learned strategies. He understood technicals, caught patterns. One day, he found the perfect setup. He put all his money into that single trade. High conviction, he thought. This opportunity doesn't come often. As soon as the trade started, the price went in the opposite direction. He waited, thinking, I'll wait a little longer. This will be a reversal. And before he knew it, his account was cut in half. He didn't understand where he went wrong. The strategy was right. The entry was logical. So why did he lose? Because he never considered what his backup plan was if the market went against his plan. This is the most dangerous mistake in trading. Overconfidence without protection. Risk management teaches you how much money to put into each trade. Money management tells you how much of your total capital should be at risk at any given time. Because the market will always be unpredictable. But if your system is predictable, you will survive. The real meaning of risk management is to survive to trade another day. The market will test you 1,000 times. Sometimes with sudden news. Sometimes with false breakouts. Sometimes with emotional manipulation. And every time, your survival will depend only on how much loss you've planned to accept. The most dangerous thing in trading isn't a loss. The most dangerous thing is uncontrolled loss. Because this loss isn't just about money, it's also about self-confidence. Money management teaches you not to be dependent on any single trade. A smart trader is one who wins with average profits, not with rare jackpots. The market is a battlefield, but this war isn't fought with bullets. It's fought with capital protection and disciplined execution. The trader who doesn't manage risk is gambling his future. And the trader who knows how much he will lose before every trade, if it goes wrong, is the one who survives in the long term. The truth of trading is this. It's not a game of winning. It's a game of not losing everything. And the one who understands this game becomes the real artist, who makes every brush stroke thoughtfully. So next time you trade, before you enter, decide when and how you'll exit. Thinking about profit is easy. Planning for loss is the real discipline. Because true success isn't just for the trader who wins, but for the one who saves himself from loss at the right time. Chapter 5. Technical Analysis, the Tools of the Trade. It was late at night. The only light in the room came from the screen, and the trader's eyes were glued to the charts. Sleep was gone, his heart was pounding, and his mind was wrestling with just one question. Is this breakout real, or another trap? In the world of trading, technical analysis is often seen as magic. Some consider it a formula, some black magic. But the truth is, it's neither perfect nor predictive. It's a language, the silent language of price and time. Technical analysis isn't the art of reading charts. It's the path to understanding the psychology hidden behind them. When a trader first sees a price chart, they just see lines, going up, then falling down. But a trained eye sees the battle between buyers and sellers, the clash of greed and fear, and the psychology of the crowd telling its story with every tick. A candle forms, and behind it is a story. A price pattern forms, and hidden behind it is the flow of human decision-making. Technical analysis doesn't tell you the future. It shows you what the crowd is thinking. And if you understand the crowd's thinking, the next move won't surprise you that much. But this is where the biggest mistake happens. People make indicators their god. They think that if RSI is oversold, the price will surely go up. If MACD has crossed, a guaranteed profit is coming. But they forget that every signal works within a context. And without context, every tool can become a trap. Technical analysis is a toolkit. But it's only useful when you know which tool to use, when and how. Would you watch a carpenter who only uses a hammer for every job? No. He knows when he needs a drill, a saw, or a soft hand. Similarly, a good trader also knows when to use moving averages, when to trust price action, and when to simply sit and observe the market. But there's another point here. Looking at charts doesn't just give you signals, it also triggers emotions. A rapidly rising candle, and your heart says, "Enter now. What if I miss it?" A sudden drop, and your mind screams, "Exit, everything's going to be over." The real battle is happening as much internally as the technical tools appear externally. Every indicator is a layer, but your patience, your discipline, and your clarity are the real weapons. Technical analysis can show you direction, but you have to make the decision yourself. And these decisions will only be right when you learn to balance the tools, not just master them. Charts show you opportunities, but they also show you traps. A double top can give you a signal, but you have to find the confirmation yourself. A support can break, and resistance might not even budge. And amidst this uncertainty, a trader has to balance his logic and emotion every day. Technical analysis isn't just about shapes and levels. It's a lens through which you decode the behavior of the market crowd. And every time you look at a chart, remember one thing. Price doesn't lie. Indicators can change. Signals can be manipulated. But price always tells the truth. It just needs someone to understand it. So next time you draw a trend line on a chart or check an oscillator, just pause for a moment and think, am I looking at the market or just my own expectations? Because in trading, victory belongs to those who listen to what price says and use tools as guides, not as gods. Technical analysis gives you an edge, but that edge only works when you use it with wisdom, not emotion. Chapter 6. The Art of Entry and Exit. A trader watches charts every day. He sees patterns form and break, and then suddenly a setup appears. His breath quickens. His heart says, "This is it. This is the opportunity." He clicks, "Buy." Now he's just watching. Every tick is tied to his heartbeat. The price goes up a little. He feels relief. Then it falls. Fear takes over. Now the question is, when to exit? This is the real art of trading. Entering is easy. Exiting is the hardest. Millions of people trade in this world, but only a few consistently remain in the game. Where does the difference come from? Not in strategy, not in indicators. The difference lies in their art of entry and exit. Entering is often an emotional decision, a gut feeling, an excitement, or sometimes just the result of boredom. But a true trader is one who, before every entry, thinks only one thing. If this goes wrong, can I handle it? Entry isn't just a beginning. Entry is a commitment, and a commitment without clarity is dangerous. Many times in the market, there are moments where everything seems perfect. Support checked, volume checked, new supportive, and the mind is confident. But still, that trade fails. Why? Because there was a strategy before entering, but no plan for exiting. Exit is the door through which you either walk out with profit or lose your dignity. Many traders are in profit, but greed says, a little more. Then the price reverses, and the profit goes to zero. Then fear says, now I must avoid a loss, and the exit happens when capital starts running out. Entry and exit are not fixed formulas. It's an art where self-awareness works more than calculation. Have you ever seen the same strategy consistently giving profit to one person and only frustration to another? Because one knows when to start a trade, and the other just guesses. Entry should be taken when the market is calling us, not when we are pushing it. And Exit should happen when the price hits your target or stop, not your fear or greed. Exit is the point where you test your emotions, and from here, a trader becomes disciplined or breaks down, shattered. Entering brings you into the market, but exiting determines what you take away from the market, a lesson or regret with your head in your hands. Every time the price moves in your favor, you start thinking, maybe this is the breakout. But if you haven't planned in advance where to book profit, The market will turn you back to the same price where you started. And then you'll think, why didn't I get out? Entry and exit are both connected to each other, but the decision for both has to be made at different moments. Entry is made thoughtfully. Exit is a test of discipline and planning. A single mistake is okay. One mistake is okay. Repeated mistakes can wipe out an account. That's why a trader first needs to learn that entry should be with thought, not just an entry signal when, and exit should be based on your plan, not just what the chart says. Many times, the price looks like it'll go higher, but a professional trader exits there because their planned target has been met. Sometimes, the small thing is what separates you from the crowd. The art of entry and exit teaches that trading isn't just a game of charts, it's a battlefield of discipline, patience, and emotional control. Entry opens a door. Exit determines whether success or regret lies behind it. So the next time you look at a chart, get a signal, and feel like making a trade, ask yourself one question. Am I just excited to enter? Or am I also prepared to manage this journey with full responsibility? Because winning in trading isn't as important as entering responsibly and exiting with dignity. That's the true art. Chapter: Creating a Trading Plan. It's late at night. The room lights are off. Only a single screen is lit, and in front of it sits the trader, tired, broken, yet still staring at the charts. Today, there was another loss. This was the third loss in the last 4 days. He thinks, maybe the market was wrong. But deep inside, a voice whispers, not the market. Your method was wrong. You didn't have a trading plan. Today's trade was a gut feeling. Yesterday's trade was a YouTube tip, and the day before's was a revenge trade. But none of the trades were based on a plan, and this is the silent reason that slowly drains a trader's account. Trading is a battlefield, and before entering any battlefield, you need a strategy. Trading without a plan is like shooting an arrow with your eyes closed. Maybe you'll hit the target sometimes, but most times, you'll just wound yourself. A plan is the shield that protects you from the market's unpredictability. And it's not about big spreadsheets or complex algorithms. A good trading plan is very simple but incredibly powerful, because it's not just a set of numbers, it's a reflection of your thinking, your philosophy, and your discipline. To become a true trader, strategy is essential, but even more crucial is clarity on why you're in the market and how you'll operate. Every morning when the screen turns on, the first question shouldn't be, what should I buy today? The first question should be, is my plan ready? A trading plan isn't just about entry and exit. It means doing what's written in your plan even when everything goes wrong. Why? Because the market will never move according to your expectations. It might suddenly drop, or it might soar without warning. And at that moment, only two things can steady you: your discipline and your plan. A trader who has never seen their written trading plan is constantly fighting their emotions. Sometimes greed pushes them, sometimes fear freezes them. But a trader who has a solid plan checks with themselves before every trade. Does this trade fit my strategy? Have I defined the risk? Have I planned the exit? Am I emotionally stable? Because a good plan doesn't just pick trades, it also helps you understand yourself. Sometimes the best decision is to do nothing, and this understanding comes from the plan. The market tests you every day, sometimes with fast movements, sometimes with fake breakouts, sometimes by going in the exact opposite direction. And if you don't have a roadmap at that moment, you'll either panic or overtrade. Not having a plan in trading is like expecting to find direction in the ocean without a map, and that's the biggest mistake. A structured trading plan reminds you, your goal isn't to win every trade. Your goal is to become a long-term, consistent trader. The trader who sticks to their rules, no matter how tempting the market may be. A trading plan gives you stability. When your emotions are pulling you, the plan says, stop. When the market is moving fast, the plan whispers, this isn't your setup. And when everything is going right, the plan still says, exit now. That was the target. Ironically, a trading plan gives you freedom through rules, because when you create rules, you can handle uncertainty. The truth of trading is this: it's a mind game. And to win a mind game, you first need to keep your mind calm. And a calm mind only belongs to someone who has a clear, tested, and personalized trading plan. So the next time you sit in front of the screen, remember one thing. The market is a machine, it has no emotions. But if you trade without a plan, you'll just be a gambler, not a trader. Chapter: The Trader's Mindset. It's morning. The whole city is asleep, but there's a room where a light is on. A coffee mug is half full, and a trader sits quietly in front of their screen. There's no joy or sorrow on their face. They're neither excited nor anxious. They're just ready, because they don't know what the market will do today, but they know exactly how to handle themselves today. And this is where the trader's mindset begins. Trading isn't just a game of charts, strategies, and indicators. It's a mind game. And to win this game, you first have to defeat yourself. Every day, the market will test your patience. Every loss will shake your confidence. Every sudden movement will make you emotional. But if your mindset is strong, you can remain calm even in these storms. A new trader thinks that to be successful, they need the best strategy, the most accurate signals. But an experienced trader knows that success comes from mindset, not just strategy. The market gives everyone an opportunity, but only those who are mentally prepared stick around. Mindset doesn't just mean motivation. Mindset means emotional intelligence, discipline, patience, and clarity. Imagine you're in a trade. The price is moving in your direction. You're seeing profit. Now two voices start inside you. One says, exit, book the profit. The other says, wait, you'll get more. And that's where the real decision happens. A decision your mindset makes, not the chart. Have you ever wondered why some people consistently win with the same strategy, while others consistently lose with it? Because success is not in the system, it's in the psychology. The first rule of a trader's mindset is, control your emotions before they control you. Everyone has entry and exit signals in the market, but who exits based on emotion and who exits based on logic? That's what makes the difference. Mindset takes you to a place where you're not afraid of losses, and you don't get carried away by profits. Mindset says, loss? No big deal. You followed the process. Profit? Good job. But don't get overconfident. No opportunity? Wait. Don't lose focus. A trader's real enemy isn't external, it's internal. Laziness, impulsiveness, fear of missing out, revenge trading. These are the shadows that follow every trader. But a strong mindset is the light that dissolves these shadows. Many people think trading is just about money. But trading actually exposes your inner world. If you're impatient, the market will teach you to wait. If you're egoistic, the market will humble you. If you're emotional, the market will break you. But if you're willing to learn, the market will make you. A trader's mindset is built from thousands of losses, being wrong hundreds of times, and getting back up every single time. This mindset says, I might lose, but I won't trade thoughtlessly. I can take a loss, but I won't revenge trade. I can't control the market, but I can control myself. A trader with the right mindset knows, it's not necessary to trade every day. It's not necessary to take every trade. It's not necessary to avoid every loss. What's necessary is honesty with yourself, loyalty to your process, and peace of mind. So, if you truly want to be a trader, first ask yourself, am I working on my mindset or am I just changing charts? Because until there's an internal change, nothing external will change. The market will keep changing, strategies will change, trends will come and go. But the only thing that will bring you victory is the trader's mindset. Conclusion. Every book shows a path, but the art of trading isn't just a path. It's a mirror where a trader sees their own thoughts, their mistakes, and their strengths. This book teaches that trading is not a shortcut, it's a long, patient, and inwardly challenging journey, where every candle is a story, every signal a lesson, and every loss a teacher. Those who think trading is just a game of money quickly get tired. But those who understand, it's a journey of self-discovery, get better every day. This is an art, and the most beautiful stroke of this art is made when you manage your emotions. When you accept losses without fear, book profits without greed, and wait without haste. That's when you transform from a trader into an artist. So, if you're on this path or just starting, remember, the market cannot defeat you unless you defeat yourself. Discipline is your armor, and mindset is your sword. In this journey, you'll lose, you'll fall. But the one who gets up and stands with a strategy again, that one isn't just a trader, they're a winner. If you enjoyed this story from the book, don't just listen to it, internalize it. Because knowledge only becomes valuable when it reflects in your decisions and actions. You were watching Book Listener, where we don't just listen to books, we live them. If you haven't subscribed to the channel yet, do it now, because we'll continue to bring you life-changing books, emotionally resonant videos, and deep insights into the psychology of trading. See you in the next video. Thank you.